Okay guys, let's see if we can set up a chart from scratch.
Matron, take them away.
And a warm welcome to one and all. I'm going to do quite a quick video today. I'm going to use my sheet to identify a pair, and all that'll do is tell me what the movement is, not direction, anything like that, just product that's going to move. Then we'll pull up the chart, we'll set it up, and then we'll just let it play out. Now everything I do is in real time. I don't do rollback charts, and I don't do retrospective sort of anything. I don't like that. I'll do it in the moment, and what happens is I either win or I lose. Now if I'm losing, it doesn't mean to say I'm going to end on a red day. What it means is I'm going to manage out of it, and that's one of the other parts of trading. It's not all about just getting in and getting out for one or two ticks. Any clown can do that. You know, it's when it goes wrong, you need to be able to have a structure in place that can get you out for either scratch, small loss, or a profit, because it doesn't always go to plan. So these are things what make you a trader. Okay, but before you do anything, you have to have a setup. So that's what we're going to do. Now, it'll be very quick. I'll just fire it up, set it up, and then I'm going to forget it. I've got a little few things to do this morning, so I'll just set it up in front of you, and then if it ends before I have to go, well, brilliant. If not, switch the camera off, and I'll come back a little bit later, but you'll see the same chart, etc. Okay, so let's flick over. Now, yesterday when I was trading, you saw me do this, which was natural gas. And I did that for dust. Little salute to you, my friend. And today, I'm going to do something a little bit different. Now, normally I put biases and everything in, but I've been out of sorts this week, so I've kind of had a little bit of a week off, just to pull myself round a little bit. Genuinely needed it. Kind of hit the wall, shall we say, burnt out, which is odd because I've just had a holiday, and I'm going on another one tomorrow. So I need to sort myself out, which is really odd. It's been a weird week this week. Certainly one of the strangest I've had in a long time. So what am I looking at? What catches my eye? Well, this is the market pick. I don't really want to look too much into full Asian markets because, well, it's a London session, so they'll be quieting down till later on this afternoon. So I want to look at the pound. Now, we always trade cable all the time. So I thought we'd trade something a little bit different today. And why is that? Because on the majors pick, it's pulled out pound JPY. Now, that's something we don't trade a great deal. So let's have a look at it. Why is it pulled it out? Well, the pound's reasonably strong. JP's reasonably weak. But the change of strength is what makes it more attractive than, say, pound US, because that's there as well. So there's a big difference from there to there, as you can see, but the change, the JPY is wider than the US. So that's what makes that attractive. All right. So that's what I'm going to be looking at this moment in time. So let's flick that to one side for now. Put that over here. And let's find pound JPY. Well, let's find pound JPY. Now, I'm going to get rid of all the marks, just like so. And we're going to take this back to bare basics. So the bare basics that you'll ever put onto a chart are what's called daddy levels. All right. Now, your daddy levels are the high, low, open, close, and midpoint of the previous day. Okay. Now, if you're looking at this on a Monday, you use Friday rather than the Sunday, because the Sunday is only a couple of hours and it doesn't hold a great deal of data. All right. So there's your daddy levels in, and then we're going to put in the midpoint. Now, this is often referred to as equilibrium, but all it means is it's just the middle, the midpoint. Okay. There we go. Right. So there is some daddy levels in place. So straight away, what does this chart tell you? What can you actually see here? Not looking so much at direction or anything like that. All we're looking at is where the marketplace is trading. Well, it's trading above the 50%, which is here, and it's pushing to the high ground, and it's already breached it. All right, it's been up and it's come back down again. All right, so could that tell you there's power to the upper side? It certainly can. Okay, now we also know the pound is stronger than JPY, so that might contribute to this pushing up. All right, so what else can we see at this point? Well, we've got a huge candle here and a huge drop. Right, okay. Let's put our little friend Fibonacci in. So you can see that move probably started there and got down as low as here. Well, look where it's running. It's just breached the 38. Well, if it breaches a 38, it'll look to find a 50%, which is here. So again, there's some more information. Now, what else can we start looking at on this? Well, you can look at the volume of the candles, these lot. Well, that's had a heavy push up, it's had a bit of a pullback, and then it's moving back up. Right, well, can we take something from that? Well, we can. We can start looking to see where it's retraced back to. Well, put that onto there. Well, what a bloody shock, right? There's your 50% of the recent move here. We've also got a 38 that lines up perfectly with that. And then if we take a horizontal line and we put it on that 23, it also lines up perfectly with that. So off this daily chart, we are fully mapped. And not only are we mapped, that fib has validated all these levels I've put in to the pip. Now, that's not coincidence. This is how the mechanics of a chart work. So we can now drop it down a level. What can we see? Huge push up, huge push down, push back up, the ebb and flow of the market, the collapse to the pip. Now it's moving steadily back up. Okay. Well, if it's breaching this, which it looks like it's doing, then it has an idea to probably visit the high point of this. So pushing up into here is not a bad thing. Now it is showing pressure down over. So if we drop it to the hour, we can see what's going on. Right, okay. There's our move up. Down here could be a good entry point. Now you can either trade down into this if you feel that, well, I'm going to catch this continuation to move down because it's rejecting this here. I want to get down into this section here because it looks like it's retracing on itself. How do we know that? Well, we can see it here. All right. Let's get the fib back on. See where that's going to take us. That fib onto there, just like so. There's the 50%. What do you know? It's pretty darn close to this. That's a good entry. I can live with that. So again, it's highlighting this little bad boy here. All right. This bit. Okay. Let's drill it in a little bit further. What else can we see? Okay. Definite sort of indecision as to what's going on. A little bit of push down. It's tried, failed. So those fibs from the hourly was correct. It is this because it's already tried to test it. Okay. So what else have we got? What else have we got? Down. 5 minute. Consolidation. Right. Okay. So just drop that back out to the hourly. Now I'm going to put on a Bollinger Band just for the short term because I want to see what it's doing. Well, sure enough, there's a rejection on the outside of the Bollinger Band. That's a sign that it's stretched. It is flaring, but it'll come back on itself. That's trading up over. Okay, so again, we look at barrier points. So I'm back to this level here. Now, if I push this out to the daily, just so I can show you, it's coming off the bottom of a bolly, but it hasn't pierced the top, showing pressure to the upper side. Take that out. Again, it's breached the 20 here, showing signs to the upper side. Back to the hourly, the retracement down here. Okay. So if I just remove that, my play is to wait for it to come down to here and then get in and around this area to move back up. And that's it. That's my play. That's what I'll wait for. And I'll be happy with that. And could I trade it down into here? Yes, I probably could. How many pips is that? And this is where being smart rather than stupid plays in. 15 pips down into there. But if I were to trade it up over, to revisit the tops of here, it's about 80 pips. So it's stronger to the upper side than it is to the downside. So my theory is I either want to see it break this. If it does that, I have an order here to move up, but I think the better play is there. So that's what we'll do. So what I'm going to do is I'm just going to drop an order in down here and just watch it for a little while and hopefully it'll work out. So what I'll do is I'll just pause the camera for now because I think maybe it's taken an hour or so to push down, and then when it gets time to set up, I'll come back. In the meantime, if I put an order in, because I do need the camera in half an hour, the order's either going to be here, but most likely in and around this area here is where I'm going to place the order. Okay, so if I haven't got time to show you it going in, that's where it's going. Okay, so I'll catch you soon. Okay, guys, that's it done. Kind of just left it to get on with it while I had a bit of work to do. And happy days. Job's done. There's a short volatility spike, which came into my favour. It was reasonably high impact. It was GDP growth for the US markets at 130. And there was also durable goods, which although is not heavy in the market, it's heavy enough to spike it. So I wasn't too worried as we were going into it. And why? Because I already had the money out of it. But I also didn't really want to tempt fate either. So it's kind of why when you see the big candles that are coming in now, you kind of step away and you take what you're given. All right. And what was I given? Well, there you go. It's all right. You know, it's just one trade, reasonably well executed, just while I was sort of messing about. So what's that, 80, just shy of 160 quid, or on 160 quid for a basic analysis. That's all trading is. You know, just make a choice, get on with it, and be happy. And that's about it. You know, and don't be dazzled by flashy lights. Don't be dazzled by big figures, all of this sort of thing. It's all relevant to somebody's account size. So if you've got a 500 account, don't try and compete with somebody with a £100,000 account. It's silly. You know, it's like playing football. You know, the Sunday League guys, they might be pretty good at what they do, but they're certainly not in the Premiership. Different settings, that's all. And all you need to do is cut your cloth accordingly. You know, size appropriate, target appropriate, and just put a logical choice into it. And you'll find this job ain't as hard as you think it is. So I'm very easy found. If you want to see the next video, it'll sort of be up here or here, down there somewhere. There'll be a little thing to subscribe. Do subscribe, helps motivate me to do more. And if you're stuck, by all means contact me. You know, my WhatsApp's in there. There's a free Telegram. And all my other contact details, as well as useful links, are down in the description. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.